Hey everybody, I'm Irked, and this is my channel, Get Irked, where I try to teach you how to invest for the long term. Today I'm going to talk about how to predict stock market direction and how to get it right almost 100% of the time. It's in fact quite easy to predict stock market direction. It's either going to go up or it's going to go down. The chances that it's going to remain unchanged are really, really slim. I know that sounds like a cop-out, like I'm telling you you can't predict market direction, but Harvard University studies have shown that you can flip a coin and see patterns that are very similar to those that are in the stock market just by flipping a coin over and over and over again. That being said, there are patterns and trends that you can see in the stock market. So predicting which way the stock market might go is kind of possible by referencing past movements. Mark Twain is famous for having said, "History doesn't repeat itself, but it certainly rhymes." Today we're going to use an investment of mine. I call it the little white digital toaster that could, and I'll show you what the stock is later. But for right now, I'll just get you a feel for where I started investing in it and what do I do now, because this one's very, very volatile. I'm holding this investment for the long term. However, it is so volatile that you're able to take profits at a high point and add to it at a low point. This is why I say you can predict where the market's going to go. As long as you have a plan for it going up and you have a plan for it going down, you're predicting the market. You're able to know what your plan is depending on which way the market moves. Now, keeping this in mind, I'm not a financial advisor. You should probably consult with one. I'm a long-term investor, and sometimes I do swing trading. A swing trade, or buying in stages and selling in stages, is more long-term than day trading, where you would hold a stock only for a day at most, and you'd buy it early in the morning and sell it, or you'd buy and sell multiple times a day. With swing trading, you're trying to get a stock at the low of a swing and then sell it at a high of a swing. I first heard of this stock from a notorious CEO named Kevin Rose. A lot of you probably don't know who he is, but he created dig.com, and that was probably his only real good invention. If you watch the show Silicon Valley, you'll see parts where they actually make fun of him because almost every investment he picks fails. Ironically, this one didn't. Kevin Rose was deciding to invest in this new small company that was called Square, and they made little white credit card readers for small businesses to be able to accept credit cards, and that was fantastic. They came public in 2016, and Jim Cramer on Mad Money had Jack Dorsey on, and what he said seemed interesting to me, and so I thought I would take a speculative position in this small stock and buy a couple hundred shares. This is August 5th, 2016, and I bought my first buy at $11.10. I like to buy in stages, which means I was going to wait until it dropped somewhere around its support level, around 870, before I added anything more. I bought half of my position on August 5th, and as you can see, Square never went back. This stock is incredibly volatile over time, making highs and then dropping to significant lows from those highs. Right here, for example, is a high of $101 and the low is $49. That's a 50% pullback. That is a spicy meatball. And you can see Square's all-time high is up at $283.19, and its low is $191.36, a low that was almost hit in the past week. But you can see, if you're nimble enough, you can buy some at certain levels and then sell at certain levels and continue to do this, kind of printing money around your position. Now, since it's a core position, I'm still keeping the majority of my shares, but I'll sell some of the shares when we reach a high, and I'll buy some more shares back when we reach a low. If you buy at this stage and then sell when you get close to the high, and again, you don't want to use the upper wicks. You're trying to get the meat of the sandwich, as they say. You don't want to buy at the all-time low and sell at the all-time high, because nobody really does that consistently well. You want to buy when you're close to a low and then sell when you're close to a high. So a good place to sell would be either at the top of this candle, or even if you want to go a little higher, the top of that candle. But you can see it's only $1 difference, because it's the difference between $274 and $273. So I'd probably sell around $270 and buy around $203.96. I'm going to show you some of my trades over the last couple of months so you can see how buying in stages and selling in stages works around a core position. And once again, not selling the whole position, not buying the whole position, just deciding for you how much of the position to buy and sell. And this can be applied to any kind of investment, whether it's in crypto, whether it's in precious metals, whether it's in stocks. You can look at swing trading, and if your asset uses these movements, you can capitalize on the volatility if you feel comfortable doing it. Like I've said, personally, I think this company is good for the long term, so I'm not selling the majority of my position by a long shot. I'm just taking advantage of the volatility. So in December 22nd, I sold at $241.69, and then I waited until January 25th to buy some shares back, replacing the ones that I had sold. And I bought a little bit early because I bought at $215.92, which gives me a discount on those shares, if you will, of about 11%. So after I bought the shares back on January 25th at $215.92, my next sell was at $260.45 on February 8th. However, when we started going higher, I decided to sell a little bit more of my position on February 16th. So I sold additional shares at $281.67. Since I sold more shares, I wanted to make sure I replaced those shares faster. So my first buy was on the 25th at $224.80, which was getting a discount off the top of about, give or take, 20%. So I decided to buy additional shares when Square lost support at 200 with an order that went through at $197.83. From here, we go to April 9th, when it looked like Square was starting to make an approach at its all-time high. At this point, Square had exceeded the allocation target for my portfolio. And I don't like it when a single position becomes way too large, so I'll sell shares to reduce the size of its allocation. And when Square was reaching its all-time high again, I decided on April 9th that I'd sell a little bit earlier than its high, with a sale that went through at $262.53. You can see that Square made it up to $278.13 before not being able to break its all-time high, and then dropping with the rest of the tech sector this past week of May. And it got to an all-time low down here at $192.29. Well, since it had broken $200 before, and it had gotten close to breaking $200 here, I decided to wait until it broke $200 to add to my position. And I did so on May 13th with an order that filled at $198.20. So from where I sold, I got a discount once again of about 24.6% on these shares. And I can just keep repeating this trend until the pattern no longer exists. So what do you do if support doesn't hold? Well, like I've said, you can't predict the future, but you can look at the past. When it comes to support, a lot of people look at a candlestick and think the lower wick is the support. And sometimes it's somewhere in between the lower wick, but you'll see that there's more of a consistency higher up. So if we go to the daily chart, you can see right about here, it's a good starting point, which is slightly above $203. If this support level here hadn't held, I have additional buy orders in place at other support levels. If you look at the daily chart, you can see that you can make other support levels at different points. These are places where people bought the stock up. So you can see we've got support around the $167 or $170 level, support around $152.50, support around $135. So these are all levels where I'll make more buys if this support doesn't hold. So you might be asking yourself, okay, well, what if you sold up at the high and then Square makes higher highs and never comes back down? Well, that's it. I never buy up my per share basis. In other words, if I haven't sold a share above where the buying price is, then I don't buy until the price either gets below where my last selling price was, or it gets to a point where I take more profits and then I'll buy below that. People will actually buy their share price up as they go. I don't like it. It never works for me. Whenever I buy my share price up, the stock always drops below my new share price, below my old share price, and to an all new low below where my per share price is. So if I just waited, I would have gotten a better deal. For me, techniques like this work better, and it's a matter of maintaining that discipline that allows me to predict which way the market's going. I'm not really predicting the future. I'm just using past data and capitalizing on what I think might happen, but also having a plan if what I think happens doesn't and the opposite happens. By making a plan for when a stock goes lower or a stock goes higher, you're doing the equivalent of predicting which way the market goes, because you're planning for both directions. A lot of technical analysts like to do a straight out call about where the market's going, But for my technique of investing, that just doesn't work for me. I find every time I try to predict the direction, I'm wrong. In fact, I like to say I succeed by being wrong. I'm wrong all the time. As you've seen in the examples in this video, I'm never buying at the bottom. I'm never selling at the top. I'm just capitalizing on the volatility and making profits where I can. But I'm also never spending all of the money for that position, so that if it does lose support, I can add more shares at the bottom until we see it regain a pattern where I can start capitalizing on this.